Welcome everybody to the State of IR in 2025 webinar. My name is Marissa Homer. I'm the VP of Marketing here at Irwin. And we're here today to dive into the key findings from our latest State of IR report, featuring insights from 178 companies worldwide. This year's data shows a clear evolution in how investor relations teams are prioritizing their time, their strategies, and their resources. It's worth noting that our survey concluded at the end of December 2024, capturing a specific moment in time. And since then, we've seen some significant macroeconomic developments and policy shifts with the new US administration, and those changes are already influencing capital markets and investor sentiment, which highlights one of IR's most critical requirements, which is adaptability. The profession demands people who can pivot quickly as market conditions, regulatory environments, and investor priorities evolve, oftentimes, as we know, with little warning. So, despite this constant change, several key clear themes emerge from our research that continue to shape IR priorities as we head into the new year. First, we're seeing a pivot in how IR teams approach relationships. So while 2024 was focused on acquiring new investors, 2025 has shown a clear shift towards deepening existing relationships, with 52% of IROs who participated in the report now prioritizing relationship management. Second, the mid-cap squeeze, as we have so lovingly named it, has intensified. A striking 82% of mid-cap companies report targeting as their primary challenge, which is up from 45% from our 2024 report. They're finding themselves in a bit of a unique position, so too large for small cap narratives, but too small to automatically command institutional attention. And third, we're witnessing a more mature approach to technology. So teams are moving beyond last year's broad AI experimentation to focus on specific high impact applications. Meanwhile, 42% of teams are working to optimize their existing tools rather than adding new ones. So I'm going to start by introducing our panelists today, a really great panel of accomplished IR professionals, and they all bring different perspectives on how these trends are shaping the IR landscape and what strategies are proving most effective. For the sake of time, I'm going to do a quick intro to each of them. We'll start with Amy. Amy Feng is an executive vice president at Edelman Smithfield, specializing in strategic situations and investor relations. With leadership roles at Spotify, Joelle Frank, and Abernathy McGregor, she brings extensive experience in advising executives and boards, complemented by deep financial expertise from her time in equity research. So, welcome, Amy. We also have Kimberly Esterkin, who leads investor relations, corporate communications, and ESG at ASGN Incorporated. Kim is a seasoned IR professional with nearly 2 decades of experience, and she's been recognized among the top 40 IR professionals in the US. She's held leadership roles with NERI, including serving on the National Board of Directors and as president of the Los Angeles chapter. So, welcome, Kim.
Thank you.
And finally, the one that we're missing momentarily, who I'm sure he'll be here in a minute, Seth Rosenwasser is currently the senior manager of investor relations at CSX. And prior to joining the CSX team, he spent 10 years at NASDAQ in San Francisco as part of the Capital Market Solutions division, working with software and semiconductor companies and helping to further their investor relations capabilities and outreach. So he should be here in a minute. And over the next hour, we'll spend our time exploring some sort of four key areas. So the first one being shareholder engagement and relationship management. We'll also talk about technology and efficiency challenges and targeting strategies across market caps. And finally, we'll look ahead at what these changes mean for the future of IR. So just a bit of a housekeeping note, we'll save time at the end for your questions, but we will have those available to us during our conversation. So you can submit your questions through the Q&A feature throughout the session. And so before we dive into the specific themes, I wanted to start with a question that came up in sort of our preparation for this session, which comes back to the theme of adaptability. So the IR landscape has already shifted. We closed the survey in December. What adjustments are you seeing yourselves or other IR professionals make in response to recent policy changes and market dynamics? And how does this adaptability factor into IR success in 2025? So, Amy, maybe we'll start with you and then we'll move on to our other panelists.
Yeah, what we're seeing across our clients is that there's been a lot of whipsaw effect, and people right now are in a wait and see mode to see if things stabilize. So we really have not seen much in terms of different acquisitions, initial public offerings, any major financial transactions, so to speak. People had expected that earlier, but what we are seeing, people are doing a lot of contingency planning and they are doing a lot of scenario planning in terms of looking at their industry, their competitive positioning, whether or not they might be targeted by the new administration. So I think the end game is we're seeing a lot of our clients do contingency planning right now.
Nice. Okay. And Kim, ASGN has obviously the government contract side. There's also your sort role that includes ESG. What are you seeing and what are you planning to do for the future of your IR program?
I guess what I'd say is if you weren't a news junkie before as an IRO, you totally are one now. If you thought the federal government wasn't important to your messaging strategy, it now is. So there things have become so fast and furious that being proactive, Marissa, in terms of understanding investor sentiment, understanding industry sentiment has become even more important. And your management team wants to know about it right away. So you're on your toes a little more than you have been. And that goes back to what Amy said about strategy and looking at different scenarios to understand where you're going. Yes, 30% of our revenues is the federal government. So I have been quite busy, but it's impacting everyone. We just heard this morning that tariffs could go in place with Mexico and Canada this week. We're all experiencing, I think Seth probably knows a little bit about tariffs from his business, right?
Yeah.
Yeah, no, CSX is a major railroad, and we also deal heavily with the government ourselves. We're regulated by the FRA and the STB. So we have a lot of investor sentiment saying, okay, administration is changing by the minute, it seems. How does this impact your business? How does this impact your relationships with the federal government? Required a lot of being on your toes and relying heavily on your fellow colleagues and company to get prepared for all of these potential questions, which it's always difficult to kind of nail that, but to be as prepared as you can for whatever gets your way, I think is really important.
100%. Awesome. Okay. A big part of that, I think, is the strength and especially in IR is the strength of your existing relationships. So from the survey, we saw 52% of IROs prioritizing existing investor relationships over new acquisition, a shift driven by market volatility and the need for stability. Also, 78% of respondents now consider tracking engagement effectiveness a top priority, underscoring the importance of quality over quantity in shareholder interactions. With that in mind, Amy, from your unique position as both a board chair and an EVP at Element Smithfield, has the investor company relationship dynamic shifted from what you saw in 2024?
It's shifted a bit. Yes, I see a lot more fellow board directors, not just at my company, but also at other companies engage with shareholder, particularly on the passive side. So just to take, for example, shareholder activism, many times the result of the shareholder vote really comes down to the passives. And that would be BlackRock, Vanguard, State Street. I would just say that we're seeing a lot more boards, particular chairs of the board, chair of the compensation committee, chair of the non-gov committee, for example, if you've just gone through a board refreshment, get in front of the shareholders during peacetime. Because the last thing you want is to appear in front of them when you're being targeted by a shareholder. So I think that's one thing that I've seen much more of.
Nice. Okay. And Kim, from the in-house perspective, what's driving the shift in focus towards relationship management over new acquisition for you? Is it true for ASGN? Has it changed your day-to-day priorities at all?
I don't know that it's changed so much. Having the support of those underlying core shareholders can't be overstated. It's very important. It's even more important during volatility because they have to be your voice to the street. They're holding you for long periods of time and they're helping get that message out. I'd say we've always had that relationship. I have standing calls with certain investors during off earnings season and analysts to make sure they're up to speed. And then I proactively go out to my top shareholders every quarter and set up calls after a report. The one thing caveat during volatility, you always get investors that come out of the woodwork who you're not expecting, and they could actually move the stock quite quickly on a day-to-day basis. So I think it's maintaining the long-term or the long-standing shareholders that you have in your stock, but it's also finding the balance and making sure you speak to those newer investors because you don't want any misunderstanding of your underlying strategy during these volatility times. So having them understand it and be your voice as the stock is moving is really important too.
And are there ways you stay ahead of that? Oftentimes we hear from IROs that their days are just so busy, there's so much things to be done. How do you make sure that there's time to for those like off the cuff interactions or things that you need to pay attention to?
I'm pretty proactive about always willing to speak with people. I don't think you should shut down. So even during difficult times, I'd say earnings, I always set aside a certain amount of time that I know I'm going to have calls. And then probably for the 2 to 3 weeks after that, I know I'm also going to have time in my schedule. So it makes a bit of a 24-hour work schedule for the IR professional because we end up working at night when no one can bother us and email us. But I think you just got to make time. And I know that's hard to understand because we never have enough time in the day, and especially if you're a small team or yourself. But I think it's one, just showing that you'll make the time is good. And then you can also have email conversations. I wouldn't put everything in email, but being responsive, I think, is the most important during a time like this.
Nice. Okay. And Seth, CSX is a larger organization. How are you adapting your relationship management strategies, if at all? And what's been most effective in maintaining those strong investor relationships for you?
Yeah, as Kim was saying, we are a small IR team here at CSX, and so we do get a lot of inbound requests. I think what's really critical is maintaining the strength of relationships is, as Kim was saying, making time. It can be a 5-minute phone call. It can be a quick email, anything to show that, hey, I'm responsive. I'm here. You're important. Doesn't matter how small you are. I manage our investor inbox and no email goes unanswered. We're here to help. That's our job. There's never enough time in the day. That's absolutely true. But one thing I would highlight here is that these relationships go both ways. So someone like myself, who is a little bit newer to the railroad industry, I actually rely heavily on our investors who have been with us for a long time. I rely heavily on sell side analysts who've been covering us for a long time for my own education and gaining perspective on the stock. So strong relationships pay us back, and I want to keep that stable.
Nice. Yeah, that's really important. And I think it's often overlooked, I think, to Amy's point, in peacetime, it's easy to chase new as opposed to build those strong relationships for the long term. And maybe we'll start with you on this one, Amy, given your board seat, but how have C-suite and board expectations evolved around IR's role in strengthening shareholder relationships? Are IR teams being asked to demonstrate more strategic influence, do you think, or from your perspective?
In terms of when I'm on the board, so I'll say it a couple ways. When I am sitting on the board, I know that myself and my fellow directors want to know how our share ownership have changed over the past quarter, particularly among not just our top 10, but we also want to know any new investors that have come into the stock. We don't care if it's a small position or a larger position, just want to know which new investors have come in. And we definitely want to know whether or not they have any sort of history with an activist fund, because a lot of the old time activists now are retiring, or they have sprung up many new funds. And it's good to know if some of their new lieutenants have started new funds and if they've started to buy the stock. The other thing is when I was leading Shopify's investor relations, we would, going back to your earlier question, we sometimes would group certain investors that have the same amount of knowledge. And that way we would allocate the same amount of time, but we would have two or three perhaps new investors ask questions to the IR team, and they actually learn from each other too, rather than repeating the same questions over and over again. So sometimes we would have double ups or triple up of new investors and spend time that way.
Awesome. And Kim or Seth, have you felt any increase in expectation or change in expectations from your management team or boards as it relates to IR and how its role in building those relationships?
Yeah, IR and strategy are actually rolled up to the one here at CSX. Yeah, we've definitely seen an increase in desirability for, what is IR thinking about our strategy since we're spearheading that.
Yeah.
Just given how broad we are to the street, how many people we talk to, and also how much we discuss internally. The board kind of relies on us to be that effective sounding board. for like, okay, how are things going? What can we do differently to achieve better, quicker results? So yeah, we're definitely seeing it.
Awesome. Yeah, Kim?
Yeah, I would agree with that. IR puts together slides every quarter that we bring to the board, and they've really evolved in terms of the shareholder analysis that Amy was talking about. And then also not just who's in the stock, but what are the top 5 messages that we keep hearing from investors in terms of question areas. So making sure that they understand what the street is talking about and then how that applies to our messaging going forward.
Yeah, it's interesting. I think having done these reports for a couple years, seeing that there actually has been a marked shift in the strategic ownership and I would say influence from within IR, we've actually seen that start to change in a positive way. So I think it's a great indicator that the profession is becoming more elevated. And I think, Seth, it's a really interesting blend that you have over at CSX where IR and strategy are one. Do you mind, like, sharing how that came to be, or if you can, or, like, if there are things that happened that initiated that sort of strategic change?
Yeah, I think so. At CSE had a little bit of change at our executive level and resulted in subsequent changes a little bit below that. And so I think the executives at our company were given the opportunity, okay, we have the ability to shuffle around strategy a little bit. Like, where does it best fit? And I think they were wise in saying, okay, interesting. So investor relations authority has a really interesting dialogue with investors in the outside world. Let's tap that to add the strategy element to make the messaging a little bit more clear and coherent. And then I think also going back to our relationship with the board, it's just a natural flow of information. It fits nicely now or tomorrow.
Yeah, 100%. It's great. Okay, we'll shift gears a little bit to talking about technology and efficiencies and the challenges that exist there. And Kim, maybe we'll start with you and Seth as well. So the report showed us that 42% of our teams manage 2 to 3 tools. How are you approaching technology integration and what's working for you in terms of creating efficiencies on your team? Kim, maybe we'll start with you.
Yeah, so I'm a team of one. So efficiency is extremely important, Marissa. So I'd say connecting my email and my calendar to the database where I get my shareholder information has been like night and day for me because having all that information in a central place allows me to have much better analysis, which my board is asking for, which my executive team is asking for. This is not a plug for Irwin, but I working with Irwin the past year and combining it with FactSet, the amount of time it took me to do my shareholder report every quarter went down significantly where I was questioning like why it was so, and shouldn't I be doing spending a little more time on this? But when you have a management team in times like this where they want information now, and our shareholder information is 45 days delayed still, to be able to have efficiency to start providing them even inklings of that information as it's being filed is really important. And having all the tools connected I'm finding, very helpful for me.
Seth?
Yeah, I would follow up on that and just say similarly, the more that my data sources can talk to each other better, I would say that in the past, what's happened is I would be given some data that still needed me to manually manipulate it before it made sense to me. Um, that is starting to decrease, I think, as product offerings like Ruin really make sense of that and eliminate those steps for you. I also want to highlight that there's just very different data sources that we have to deal with. So again, any sort of efficiency that can make that better is well, data, financial data may behave differently than contact data or meetings data. And synthesizing that and making sense of it might be a different process each other. So anything that can happen for efficiency, I'm all for. I welcome the changes that's happening here. I'm really excited to see where it goes because I would love more time.
Yeah, and it feels good to have productive time too, right? Time spent on the insights and the strategy as opposed to the Excel tables and trying to make sense of a bunch of different data sources. Definitely heard on that side. Uh, and everyone's favorite topic, the topic du jour, and Amy, maybe I'll start with directing this question to you. Our report found that AI adoption at consultancies is much lower compared to in-house IR. Is Edelman Smithfield adopting AI internally to support client workflows, or is your focus primarily on counseling clients on AI use cases and strategy?
We are adopting. I think we are probably ahead of the curve in terms of many of the advisory firms. You have to remember several advisory firms are still very stuck in the old, and they're so afraid of the security breaches because of the materials that were given, that they're very afraid to use it. But I would say not only just for us, but also for many of our IR clients, they are using AI in baby steps. Um, what I mean by baby steps is, in the past, you might have to read 5 to 10 different research reports of your competitors, and then you have to type it up, the summary. Whereas now, if you feed it into an enterprise grade chat GPT that's within your own firewall, you can spit that out within minutes of what your
Hmm,
competitor have said, what questions were answered on the various conference calls and earnings calls in the past couple of quarters, help you plan ahead. Here at here at Edelman, we do that, but we also, because we do have enterprise level AI, you can actually also use it to anticipate the questions that will be asked. And you can also take a look and see the earnings script and see, for example, which keywords were flagged, which keywords will flag what type of questions, what kind of tone does your earnings call script convey? Is that the kind of
hmm.
tone you really want? Yes, I would say we're ahead of the curve. And I would say that many times AI, we are seeing adoption when it comes to research compilation and getting a quick summary of past results.
Interesting. And Kim, Seth, maybe Kim, will start with you. Have you used AI in any capacity in your day-to-day role or even one-off role, or do you still have reservations about it? How are you feeling at the moment?
Use it every single day. If you asked me several months ago, I wouldn't say that, but I was one of the fortunate ones at my company to be given a Microsoft Copilot license. We were one of the piloters of Microsoft Copilot as they're one of our technology clients. And so I use it, like Amy said, for summaries. I was tracking all the stuff going on with changes in DEI and who was pulling out of the net zero asset managers initiative, and I captured about 15 or 20 articles during earnings season and didn't have time to read them, for example. I put them all into Copilot. I said, summarize each of them and highlight the 5 key terms, 5 key ideas from each. And it saved me so much time. I use it, the summaries of my peers every quarter. That takes a ton of time, especially because they're reporting as I'm reporting. So I use that for summaries. I use the fact set summaries that come out in addition to having it read the transcript for me. I have it do simple press releases. So announcing a conference, announcing a conference call, it can take the dial-in number that I give it and create it for me. I think it's an efficiency tool. There still needs to be human interaction. It's not always going to have my voice. It's not always going to pick up on everything I want. As long as they're using it within a safe framework and not putting MNPI into public models, I think IROs should be embracing it.
Nice. Beth, how about you?
Yeah, to Kim's point, I think the summarization feature is something that I've used heavily. CSX as a railroad. I think that there's multiple industries within this industry, serves many different end markets. We're connected to trucking and commodities, and to accurately synthesize our story and get prepared for earnings, and also we need to understand what our peers are doing, and that might cross sectors where I might not be as familiar, or I might not have the ability to read the amount of research notes that front to back, or earnings transcripts that I can. Anything that can help me summarize the main bullet, get the sentiment out, or give me some leading indicators of, okay, you need to look a little bit more closely with your eyes this one because this was a little strange. That's super helpful to me. I think it, as Kim was saying, it's a little bit, you got to verify. I don't think AI is there picking up all the pieces and interpreting it the way you want. So I do think there's some work to be done there. But on a first cut basis, I think condensing all the information that's out there with all the different spaces that I deal with all the different companies that are reporting, not only my peers, but crossing into other industries is absolute.
Yeah, I think the summarization features within AI, of course, like with a layer of judgment applied that these models don't have, great for efficiency in all roles, but especially in IR where there's so much information to intake, consume, and then there's a large audience that expects you to know all of that data
Mm.
inside and out now. Have any of you Do any of you still have concerns as it relates to AI? Amy, you deal with many different clients, and as Edelman does as a consultant, are you seeing some certain sectors or types of clients who are more hesitant to use AI in their workflows?
I think it really depends on the technology savviness of the C-suite and the board members, and whether or not they're willing to give an enterprise level AI platform to the company. And I have seen companies adopt it, but they also have a very rigorous policy of AI in which all employees have to be trained on it first before you're even allowed access. And I think that's imperative. You've got to learn how to use it before you're allowed access to it.
That's a good point. I don't know that there's enough out there about scaling AI within an organization and the requirements you should apply to that as a public company or for any company. So it's a good point, and it's an interesting, I think, topic that there are those who are ahead of and those that maybe haven't adapted yet. Kim, Seth, do you have any outstanding concerns as it relates to the use of AI in IR?
I would say that often is the case that they try to go a little too far, a little too quickly.
Or
I've seen some maybe first generation tools that can leverage AI, build a company story using available information. But I've also seen that to turn out not so great to the point where they're, in the wrong context, numbers that are out there that are related to us are not true. And so I think there's going to have to be a long kind of runway for real efficacy to use AI to generate narratives about stocks. And that's my concern is that I would hope that it doesn't get out there and maybe the wrong message spreads too quickly to people that don't understand. Like this wasn't really written from the context of someone who was digesting all the information themselves. This was something that was generated on the back end of an AI.
it's interesting. Kim, anything to add to that?
Yeah, I'd go back to what Amy was talking about. As an information technology company, AHGN is really concerned about making sure that our people are using AI correctly. So we did develop our own artificial intelligence policy that all of our employees were trained on. And then I worked with the team, the legal team, and we developed a special one that goes to anyone exposed to MNPI and how to use AI. So IR, finance, accounting, right? People who might hopefully not, but put information into a public domain. And ChatGPT, things like that are blocked on my computer for work, right? So we have policies in place. And then I put a plug in for NERI, where I sit on the board. We put out NERI's kind of policy on AI recently, which anyone on this call can go to the website and look up. And that's supposed to be good guidelines, not just for how to use it, but how to talk to your executive teams about how to use it properly and safely so that you can get them, like Amy said, on board to be more technologically advanced so they're willing to use it because any new technology is going to cause concern. It's just making sure that the people understand that you have the capability to use it safely. And so if you can say, I've helped you develop this policy, and I'm not gonna lie, I created that MNPI addendum using Microsoft Copilot, right? So I think there's a lot of great things out there. It's going to take some time before we're all comfortable 100%. And I think it's important for people who are newer to our industry to know that they can't put certain things into these tools. And it comes down to adding that to Reg FD training. So we're going to have to evolve the training for the newer set of IROs to adapt to these technologies, but we'll always have to do that, in my opinion, as long as technology keeps evolving.
100%. And I think it's so interesting to Seth's point about what you should and shouldn't use it for. I think that there is a layer of judgment and expertise that goes into crafting narratives specifically for an investor audience. And I think that's such an important function of the IR role. So I feel like it's hard. Like you want to be able to, because it's hard work, you want to be able to offload that or make it easier in some way. But there's some things that you just can't automate or add AI to as a workflow because it requires that level of expertise and context. Have any of you seen a shift in the last year of the ability to automate certain tasks as it relates to IR? And what have those improvements been like? Day to day administrative stuff that maybe we used to Seth's point, manually comparing data versus now you've seen an improvement in available automations to you or found a way around it.
I would say on the meetings angle, basically giving me an accurate relative list of how to categorize. Let's say I'm meeting with somebody, getting relevant categories to tag that. I
Mm,
don't have to there and work the system in a way that maybe wasn't intended to. The system kind of predicted that. And I just feel like entering meetings data on your own platform is actually really good. It saves me a lot of trouble. A lot of this not too long ago was just off the cuff Rolodex kind of stuff. And I've really seen a tremendous improvement in the streamlinability to, again, capture data that has historically not been super savvy, like meetings data, as opposed to, like, let's say, financial data.
yeah, 100%. Kim, Amy, anything you want to add to that?
In the CRM that I use. I love how when I put all my data, I put in my meeting notes, and now there's features, and I think this is probably across a bunch of different platforms, but like summarizing the positives of the meeting, the negatives of the meeting, what were the key, because I'm going to get on the call with my CEO and CFO 5 minutes before the investor gets on and they want to know, Kim, remind me of what we talked about last time and what were they concerned about? And one of them had concerns about the federal government last time we got on. And there's been a lot going on, and that was 2 years ago. So how are we going to respond to it now,
Mm,
right? So I think when we're all moving so fast and we might not have the time to spend 40 minutes, an hour going through all my notes from last time, having it summarized for me and ready to go is really important. So I definitely think some of those things that I would have to carve out time ahead of a call, I can now give myself 5, 10 minutes to do, which is very helpful.
yeah. Okay, awesome. Let's move on to targeting. So targeting always at the seemingly somewhere close to the top of the list every year in our report. It remains a challenge for 71% of IROs, but it manifests differently depending on the size of the company. So for mid-cap companies, 82% of IROs highlighted targeting as their biggest obstacle, reflecting the struggle to attract institutional attention. Meanwhile, large cap companies face different pressures, focusing more on refining the outreach that they're doing and maintaining those strong institutional relationships. So, Amy, maybe we'll start with you. From your client base, what trends are you seeing and how different market caps are approaching targeting? Where are the biggest challenges emerging, and how are you advising clients to refine their strategies?
Across all market caps, we are seeing that targeting is very difficult. There's new funds arising, and old funds are sometimes just not interested. So this goes back to you keep what you got. Going back to Kim's point, their existing shareholders are very critical. You want to keep what you got. You want to try to get new high quality ones, but that's not just a small cap or mid cap problem. It's large cap companies too. What we are seeing though is that companies in general are being very picky about which conferences they're attending now on the sell side because they're seeing the same people over and over again on the investor side. And they tend to be hedge funds and momentum funds because hedge funds and momentum funds pay the investment banks the most money in trading commissions. What we are seeing is that across all market caps, companies are doing more of their own non-deal roadshows because they will go see the investors that they want to
Wow.
go see. And we are also seeing in general investors overall traveling less. And
Mm,
so it's even more critical that the companies do very high quality non-deal roadshows of their own. It may not even be a roadshow. It may be the CEO knows that she's going to go see a major customer in, let's say, Washington, D.C. or in Maryland, and then squeeze in a couple of high quality investors while she's in town.
yeah, that's actually a very interesting approach. I feel like over the last year, there's been a real increase in the number of in-person interactions and events, and especially company-owned events. So, like issuer-owned events, roadshows, and just like investor meetings while other things are happening. I don't know if this is just specific to me, but I felt like there's an extreme rise in the number of investor days that happened in the last year. But it's interesting. And I think your approach is a good one. Have you felt any of that kind of like mid cap squeeze? How has ASGN adapted its targeting strategy and storytelling to stand out to the right investors?
Yeah, so it's interesting because I don't think it's our market. I think it's our story and that we're really a sum of the parts. So we have IT staffing, we have commercial consulting and federal government peers. And so it's hard sometimes to find an investor who understands all three different of our business. So the way that I've looked at targeting the past couple of years is not peer but peer agnostic and looking for financial metrics. I'm looking for companies that value EBITDA consistency and margin. I'm looking for companies who value free cash flow. So I've worked with my targeting team to develop a target list that looks at more of those because that's been the messaging of our company over the past year, right? We've maintained our margins and we've had really good free cash flow generations. Having a more unique targeting strategy because our business itself is unique has been important. And I think that happens to whatever market, if you're not like fitting into one specific industry and you have a general shareholder base, sometimes it makes it harder to tell that story and to figure out who the right fit is. So I've been a little creative in terms of our targeting the past couple of years.
Yeah, I think I heard that in a conversation, I believe it was with, Andrew Storm from Delta, who said, "I'm not asking someone what airline they can give up to invest in Delta. I'm asking someone what space can we make here in place of maybe someone who's not an airline? Is it retail? Is it something else?" And trying to find new investors based on different criteria than just industry and market cap. So it's interesting. Seth, from a large cap perspective, and I know CSX is a railroad, so there's long-term investors, but is targeting still a priority for you? And what are you doing differently now to expand your investor base?
Yeah, absolutely. Targeting is still a priority. And as a larger company, we do have a lot of different investors that we struggle and deal with. One of the things that's interesting here is that investment is relative, value is relative, growth is relative. So there could be many different strategies going on in a company at the same time. And we've consistently risen our dividend for 21 consecutive years. So yes, dividend income is totally on the table for us. To your point, Marissa, we actually did an investor day late last year, and we came out with a message that might have been a little bit uncommon for a rail. We focused heavily on growth. And so now we're a railroad that maybe hasn't entered into that growth segment. Okay. As an IR team, we're like, okay, are we under indexed to growth investors? We're putting out with this new message that maybe the street's not aware of. Let's go and find some growth investors that may not be aware of our current strategic ambitions, and let's try and fill some holes there. You could also make the argument that value investors take a center stage for our stock as we are on a PE ratio. We are one of the cheapest rails amongst peers. So there's many different strategies at play. I think the larger you go as a company, the more wider you get. And then obviously you just need to narrow things down using what tools you have at your hand.
Awesome. Yeah, it's great. I love to hear this because it's such a diversification from, I think, pull me a target list of investors in this area who invest in companies that look exactly like mine. I think it's like a longer term play, and I think it just finds you better investors for the business long term. So it's awesome.
I think
Uh,
there are two different things. I don't know, Seth and Kim, if you agree. There are two very important things that will help a company attract more investors and sell side coverage. Now, the investors may not always be the ones you want, but just in general, just to attract a broader base. The number one is if your average trading volume increases, because investors of all shapes and sizes, especially the large long only funds, they want high liquidity in your stock because they want to be able to get in and out pretty quickly if they need to. So that's one. Average trading volume needs to increase. The second is the simpler the story to understand to someone on Main Street rather than Wall Street, the simpler the story, the more people you will get involved with your stock. And I'm not talking about retail, I'm talking about institutional funds because, yeah, because over the past, let's say 20 years, the number of stocks that a buy side analyst must follow has increased about fourfold. And a portfolio manager has to manage those stocks, and that's increased two times. So for example, a portfolio manager may have managed 150 stocks 20 years ago. Now they're responsible for over 350 stocks. So the cleaner and simple your story and easy to understand. And second, make sure if you can increase your trading volume, that would be great.
Yeah, it's interesting because storytelling is also an issue that I think a lot of, especially you're small, you're a team of one, you're working with your executive team to try to nail that story down. You're working with different business units, maybe lots of people across the business. It's quite a hefty task. And then there's that expected level of personalization with the investor that you're speaking to. Any quick tips for IROs who are maybe struggling on the storytelling front?
I know that here at CSX, we really love to give a lot of build. It's very easy to say, hey, we're going to grow or we're going to do XYZ, but that's what we focus on is did we give the street, to Amy's point, enough of the puzzle pieces where they can put it together simply? And did we
Mm,
give them enough information where the story is believable? We internally might have our own view of what, you know, of the story we're telling. But again, using the community as a sounding board, are we then taking the right illustrative steps? Is our message consistent and building throughout the year of IR, your earnings or conferences? Like, how is that message progressing? And these things can be obviously spoken through talking and stuff like that. We love to use a lot of like visual examples and it's just, to how we're doing on our progress. And we found that to be pretty helpful.
yeah, good memory cue.
Right.
Kim, any tips on storytelling?
Yeah. So I don't know how many years I've been going into elementary school for my kids doing career day and trying to tell them what investor relations is, which has been hard teaching third through sixth graders about the stock market. They know a lot about NVIDIA, apparently. But what I've learned is how can I tell them what my company does? How do I tell an elementary school student? And then obviously I'm going to have to take it up multiple levels, right, for the investor community. But if I can get it down to that and they understand what we do, then I could tell it to anyone. And it's like, how do I tell the story to your mom or dad? And they are not a financial professional and they get what you do. Kim, you're not an investment banker like
Yeah.
my dad thought I was for many years. You do investor relations, really going down to the basics. And so some of the things we've looked at after earnings, we update our investor deck with the most recent financials because that's the cadence. We go out on the road, right? We talk to investors after we get out of our quiet period. One of the things I'm trying to work on this quarter, are there certain questions that have come up religiously in earnings where maybe I'm going to put a quick slide in my deck this time so that if I don't get to that question during the conversation, and we're also very big fans of NDRs, it gives you much more time to talk with the investor than the speed dating you get at a conference. I've put together about 2 or 3 slides I'm looking to add to our deck when we put it out in the coming weeks that are pretty simple. It's imagery, like Seth said, that shows it in a quick chart or something with 5 key points that you can take away that if that's on my website, even if I don't get to talk to you and you're concerned about it, it's going to answer the question for you because it's great to go out on the road and talk to people and it's great to make time, but you might not have the time to talk to everyone. So I'm trying to find new ways to get that messaging out, whether graphics or if I could put out a press release for one of my brands that I can throw in some messaging from the corporate side while they put out that I'm gonna do it. So that's how I've done it. But I've taken the elementary school student as my basis and moved up from it.
I love that. Love that. Okay, we have a couple minutes left. We'll try to do this very quickly here, but looking ahead, so maybe to each of you, we'll keep it to one question, and I'll start with Amy. If you could offer just one suggestion for IR teams to prioritize for the remainder of 2025, what would it be?
Contingency planning. Really think hard about what happens if you're targeted, either the company's targeted or your industry's targeted, and what your holding statement and what your plan will be is if you're targeted somehow by the new administration.
Kim?
I think it goes back to what we've talked the whole time, which is consistency in messaging. There's a lot of volatility in what's going on for all of our industries, for the entire economy. If you can be consistent and provide a story that investors can continue to go back to, think that will do you well, even if there is movement up and down in your stock.
I would just say that I think IRs, they have a lot of goals. We were talking about expanding roles. And so your eyes are on more things, but don't lose sight of the goals you want to achieve. Stay focused. Say
Mm,
that's my advice.
nice. That's great advice. Okay, for our audience, if you do have any questions for our panelists, you can put them into the Q&A and we will try to address as many in the next 5 minutes as we can. But yeah, just drop your questions into the question and answer section at the bottom of the Zoom bar. I guess while we're waiting to see if anything comes through, oh, never mind, got one. To follow up on one of Amy's recommendations about the importance of engaging with the big passives during peacetime, do you or other panelists have perspectives on how open those institutions were to meeting with small cap companies outside proxy season in 2024 and early 25, notwithstanding what looks to be a temporary pause on meetings from BlackRock, Vanguard, etc. Work out how to navigate the SEC's mid-February 13GD guidance.
Okay, I'll talk about I met with all of the major passives of Whitestone REIT, which I'm the chair of. And we started talking with them September, chatted with them October, November, and then my last meeting was actually with Vanguard in mid-January, just before the inauguration. How you frame your email is very critical. You need to have something new to say to them. And I would say in general, all three were very consistent. They wanted to talk about board refreshment. What was the process in terms of we brought in two new directors recently. They wanted to talk a bit about the compensation plan, any changes that were coming up in terms of what's going to go into the proxy. And they also wanted to talk a bit about not DEI, but they wanted to talk about sustainability and what's the impact, for example, of the tenants in our properties and what is the company itself doing to do things that are more environmental. You are best served for each of your passives if you allow your CEO the first 4 to 5 minutes to talk about the strategy of the company and also any great results that have resulted due to the strategy before you allow the passives to ask their questions for the rest of the 45-minute session.
Nice. Anything from Kim, Seth on that topic?
Yeah, so we did a big off-season proxy outreach. I started reaching out to top shareholders, including passives, starting right around mid-October before we reported our quarter. And we held calls up until the end of the year into January. I, the head of our nominating and corporate governance committee, as well as my chief legal officer, were on those emails. And I introduced myself to make the intro for some of them who I had never spoken to before, as well as just said that we want to maintain this relationship. We just will be reporting. We're happy to speak on the quarter, but we want to hear what you're thinking about for the upcoming proxy season. So give them the opportunity to voice what they are deeming as important for a proxy season, and then saying we're open to have a call if you would like. And we did get a bunch. Some of that have requested the board to partake, some that have not. In addition to things related to traditional governance, board replenishment, as well as staggered board structure, there's been more information or a request for information on cybersecurity and what we're doing to protect our systems. And that obviously we have new regulation at the SEC related to that. So as things like DEI might get put to the side for the time being, given the executive orders, I do think cybersecurity will continue to remain a top topic of interest and something we can definitely see as of interest to our shareholders. And what I'd say is it doesn't really matter your market cap. All these passive funds have a requirement to talk, but before all this went down recently, where Vanguard pulled back, BlackRock pulled back on having these calls because of fear of influence, they do have requirements to talk to a certain amount of their issuers each year. So as long as you're willing to show them that you will give them access to management or the board, I think they're very willing to talk to you. You just have to be proactive about doing it. And also take a look at the NPX filings if you can get access to them from the prior year. figure out what they voted yes for and what they voted against. And if they voted against anything, make sure you're ready to talk about that and recognize it in that email as well.
Great advice. Seth, anything to add there?
Came forward pretty well.
There's one question here which I think is good. I think it's I just want to get it in with the last minute or so. What's your advice to an IR who is faced with C-suite who are reluctant to engage with the street? It's a good question. Anybody have any advice?
I would say just because in our C-suite, we have a lot of different personalities. And I think we take a different approach. We like figure out who is good at what and focusing on their, on their excellent qualities and giving them confidence in that direction. And honestly, a lot of I think confidence is key.
Yeah.
I was going to say exactly that. Make your management teams feel super comfortable. Anytime I go out on the road, they get a little packet that says these are top 5 topics we're going to focus on, and then it has other things, but we're going to keep going back to these messages so that one, you make sure everyone's saying the same thing no matter who's on the road. And then two, they are really confident in what they're saying. And I do bringing in, if you can, different people. So we've brought in heads of our different brands to give exposure to like more of the depth of the leadership. If we know someone's going to be focused on one segment of our business versus another, we might bring them to a conference because they can add that added layer. And then be honest with your management team. Why is it they don't want to? Is it because they're uncomfortable and not great at the interaction? Do they feel like they need to be prepped more? Or is there something they're really concerned about that specific event? And how can you talk to them to make them comfortable? Because we're IROs, but we're also therapists sometimes, right? So we've gotta help everyone get over their fears and make it an easy process.
Awesome. Okay, we're at time. Here's wishing everyone good luck and a great year ahead. So thanks, everyone.
Thank you.
Wish